All right, the next installment of the sixth homework set here is going to go over the ideas and concepts around a change fund. Again, this is going to be if you have a brick and mortar storefront, you need to make change. So that means you're going to have cash registers on the premise. So this is going to be for Jarvis Inc. is going to establish a change fund for its storefront cash registers, and the amount of just $300. And on day one, total cash on hand was $2,544 with a tape total of $2,250. Day two, cash on hand was $3,278 with a tape total of $2,974. Now, keep in mind, those total amounts of cash on hand also include the change fund itself, as you'll see in a moment. All right, so first up, we're going to just do the journal entry to establish the change fund. Again, once again, disregarding the needs of a voucher system, just a two-line transaction. So we're just simply saying that the money is no longer in the bank, so it's now in our change fund. So debit, change fund, credit, cash. So it's just switching location. Now we'll look at the journal entries for day 1 and 2 of the operation. So as I said just a moment ago, again, when you're figuring out how much cash you need to deposit that evening, it's going to be basically the 2544 minus 300. So in other words, the amount of cash that you would debit in your books would be equal to 2244. And whatever the tape total says, again, that's your independent verification. And that's going to tell you that there should be $2,250 in the cash register. And in this case, our discrepancy is a $6 shortage on the debit side, which means that we had a cash shortage. Clearly, cash was smaller than the tape total. So that's a cash shortage of $6. Now, on the next day, on day 2, there was $32.78 in the registers, again, including the change fund minus the change fund means we would deposit $2,978. And our tape total on that day was $29.74, so we had to plug to the credit side. So in this case, that $4 means we had a cash overage of $4 on our hands here. Now for part C, so the month-end balance and cash short and over was a $40 credit. How should they report this on the income statement? So remember, you're going to have some accumulation going on there. And what do you do with it? We already discussed in another video what happens if it's a debit balance, what happens if it's a credit, though. In the case of a credit balance, this would be consistent with what? The normal balance of a revenue. So we would reclassify this as some sort of other revenue. In other words, that $40 would be debited out of there, and we would just credit it to other revenue, and that's how it would be reported. And D, I thought I'd throw this in here just to talk a little bit more about the idea behind a cash register. I might have alluded to it just a second ago there. Again, what is the internal control benefit of a cash register? Again, what is this giving you? Independent verification of the sales associated with each register during a sales associate's shift, again, thereby deterring theft. That's the main benefit there. It's letting somebody know that they're being watched independently because this tape total is saying this is how much should be in the register, this is what the sales are, and therefore the cash amount should be somewhere close to that, right? You probably, in reality, not going to ask for perfection. Like usually in a classroom setting, I ask people, like, have you ever worked a register? And if so, what was the amount of tolerance that you could be off by each day, you know, when you rang out the register? And I've heard a variety of people, answers to this: $5, $10. I've even heard $20, which I thought was extraordinary per day. But of course, obviously, if you were off by $20 every day, they would begin to understand you're probably not just off by 20, you're probably stealing money. So again, there's a little bit of a caveat above that $20 limit. It's not that they would tolerate it, but if you're like one day you're off by $20, they wouldn't freak out. But let's say the next day you're only off by $2 or $3, then it's okay. But if it was always $20, they would begin to understand there's a pattern at work here, and it's not just an honest mistake. So that's the purpose of this. Is this independent verification is a theft deterrent, and also gives you feedback if somebody is stealing from you that maybe perhaps they need to be let go of, again, if they were consistently down $20. Now, what's your biggest limitation if you're talking about this as an internal control? And of course, remember that registers cannot eliminate human error. That's just impossible. There's always going to be human error at work, which is why you have to have some sort of a standard of tolerance for how much the discrepancy is. I've actually heard some people say they couldn't be off by more than $1, which I thought was like, again, if your shift was long enough, $1 would be a pretty tight margin to work with in terms of accuracy. So that's why again, and this is just one of those, we call them soft issues in the accounting world, which is that might sound like good idea on paper. You're trying to enforce, the idea of, okay, be as accurate as possible with when you give, change to customers. But again, the flip side of that is you might actually encourage some employees, because they're worried about being over $1 off, dollar short. They might encourage them to actually do what? Try to shortchange customers and hope that they're not paying attention and give them not enough change to try and cover any potential discrepancies. So that's why that's maybe a bad idea to make it so tight like that. And the thing to keep in mind here is, it's like, again, this is also true of any internal control, no matter how well implemented or designed. You can't eliminate human error. There are things you can do to mitigate it, which just simply means minimize, but the idea of eliminating it entirely is probably, it's impossible. As long as you have human beings interacting with these systems, which is inevitable, the way that they're going to work. Again, you can automate some things, but you can't automate everything. So always keep that in mind when you're working, with an internal control system, that you have to factor in human error when you're designing it and implementing it. And again, wherever you can minimize that, do so, but also understand it's not going to be a completely, it's not, you can't zero that out as a possibility. It's just not going to happen. All right, and that concludes the fourth part of the sixth homework. So stay tuned, look for any additional addendums to this. I might be considering maybe one other thing, and then otherwise, from there on out, maybe move on to the seventh and final homework set. See you there.